Money looks harmless, just paper, metal, numbers glowing on glass. But behind every price tag hides a darker question. Who convinced billions of strangers to obey the same invisible scoreboard every day? We walk straight into wood-paneled offices, handing our hard-earned savings over to smiling suits with framed degrees. We assume they know the secret map, Slamsum's gates to true wealth. But what if they are totally lost? Turn on any cable news channel, and you will see shouting faces waving brightly colored charts. They scream about market crashes and hot stock tips, yet none of these TV geniuses ever get wealthy. The advice you hear repeated since childhood is actually a beautifully designed corporate trap. Work 40 years, save your pennies, buy a house, and pray the global stock market does not suddenly collapse. The game is not designed for you to win. It is built to keep your capital trapped. While you blindly follow the standard rules, the architects of the financial system are playing a different game. Why would institutions give you advice that guarantees average, mediocre results? Because your financial confusion is profitable, generating billions in hidden management fees every year for corporate giants. The word expert is just a clever marketing shield used to prevent you from asking hard questions. Today, we tear down that pristine wall and expose the massive conflict of interest ruining your retirement. Over the next 10 minutes, we will deconstruct the 3 biggest lies you bought into. Once you see the actual math behind the matrix, you can never go back to being financially blind. Let us start with the holy grail of mainstream investing advice, the 1% management fee. It sounds harmless, almost like a tip, until you calculate the compounding destruction over 30 years. If your portfolio grows, they take a cut of your total net worth. If the market tanks and you lose your house, they still take their cut. They take absolutely zero financial risk, with none of the downside. Run the math on a standard retirement account over a normal working career. That tiny, innocent 1% fee quietly steals up to 40% of your total potential gains through lost compound interest. Where does that stolen wealth actually go if it does not end up in your pocket? It funds the massive glass skyscrapers downtown, expensive corporate private jets, and lavish multi-million-dollar executive bonuses. Here, your advisor pushes actively managed funds, claiming they can beat the stock market. But independent historical data proves 92% of these expensive funds underperform simple index funds. Why do they recommend them anyway, if the performance is consistently terrible? Because those funds pay massive under-the-table kickbacks and commissions to brokerage firms for pushing their garbage products. They constantly buy and sell stocks inside your account, creating a massive illusion of intense activity. Every single trade generates tiny transactional fees that slowly eat away your principal balance without your knowledge. This excessive, unnecessary trading triggers massive short-term capital gains taxes that you must pay. Your advisor gets a beautiful bonus, the government gets a fat check, and you get a giant tax bill. The legendary billionaire investor Warren Buffett proved this by winning a famous million-dollar bet against top hedge funds. A simple, unmanaged index fund crushed the absolute best minds Wall Street could assemble. Your financial advisor is not your co-pilot. They are a sophisticated corporate salesperson. Their primary job is not to build your personal wealth, but to securely gather assets under management for profit. They use advanced psychological training to weaponize your natural fear of missing out and market volatility. They convince you that managing your own money is far too dangerous for an ordinary civilian. Breaking free from this first trap requires taking back full control of your investment fees. Stop paying people to underperform the market. Fire your expensive advisor and buy low-cost index funds instead. Now, let us attack the ultimate cultural sacred cow. Owning a home is always your greatest asset. This single piece of advice has trapped millions of families in decades of heavy, inescapable debt. Look closely at the amortization schedule of a standard 30-year mortgage. During the first 10 years of payments, almost all your cash goes toward interest, not the actual principal balance. The experts forget to mention property taxes, homeowners insurance, maintenance costs, and transaction fees. When you add up these numbers, your investment starts looking like a cash furnace. You buy a house for $300,000 and sell it 20 years later for $600,000. You think you doubled your money, but inflation and maintenance totally destroyed your actual profit. A house is a completely illiquid asset. You cannot easily eat brick or pay medical bills with drywall. Your wealth is trapped inside the frame, completely useless, unless you borrow against it. Who actually wins when you sign that giant stack of closing papers? The bank secures a guaranteed 30-year revenue stream, while the real estate agent walks away with a fat 6% commission. The National Association of Realtors spends massive amounts of money lobbying politicians and funding media-produced, polished, gleaming political handshoves. They need you to believe renting is throwing away money, but that is a lie. Renting is actually buying flexibility and capping your maximum monthly housing cost. When you rent, the price you pay is the absolute maximum. When you own, the mortgage is just the minimum. Think about the massive opportunity cost of that giant down payment sitting dead in the dirt. If that cash was compounding in productive businesses, it would generate far more historic wealth. A massive mortgage forces you. The only trapped is the sickly hum of the job you absolutely hate. You cannot take entrepreneurial risks because you are terrified of missing a single monthly bank payment. The modern economy rewards extreme geographic flexibility and quick adaptation to new opportunities. A house anchors you to one specific city, preventing you from moving where the real money is moving. A primary residence is a lifestyle consumption choice, not a pure wealth-building vehicle. Stop looking at your home as an investment portfolio and start treating it as an ongoing monthly expense. The third great lie is extreme diversification. Spread your money across 20 different asset classes. They tell you it protects your downside, but in reality, it completely dilutes your ability to build wealth. When you own everything, you effectively own nothing of significant value. You are guaranteed to get average, uninspiring market returns that barely keep pace with the real rate of monetary inflation. During a massive global economic crisis, all asset correlations suddenly go to one. Your stocks, bonds, and real estate all crash simultaneously, proving the diversification safety nest is a complete mathematical illusion. Why do experts push this complex strategy so aggressively to the public? Because managing a highly complicated portfolio of international bonds and alternative assets justifies their high fees and continuous existence. Look closely at how the truly wealthy actually revolutionaries of a company revolutionaries created their massive fortunes. They did not diversify. They concentrated their capital, time, and energy into one single business or hyper-focused industry. Wide diversification is only required when investors do not understand what they are doing. If you truly analyze and understand a business, owning more than 5 companies makes absolutely 0 sense. When you scatter your focus across 50 different investments, you cannot properly track any of them. You become a passive gambler, hoping the general tide lifts your messy, unorganized financial boat. True protection does not come from owning a tiny part of everything. Real financial security comes from deep personal knowledge, operational control, and holding concentrated positions you thoroughly understand. Now that we have smashed the 3 foundational lies, you are officially unplugged from the matrix. The path forward requires a complete psychological shift, away from institutional dependence toward radical self-reliance. The wealthy do not hoard cash or accumulate index funds to build their empires. They focus on increasing their income velocity and acquiring high-margin, scalable business assets they control. Your goal should be acquiring cash-flowing assets that offer tax advantages, intellectual property, automated businesses, and commercial real estate allow you to legally bypass the retail investor traps. The experts teach you that all debt is evil and must be avoided, but the elite use low-interest arbitrage debt as a high-power weapon to acquire massive cash-flowing assets, completely tax-free. Stop consumption spending disguised as investment, and stop taking financial directives from people who earn an hourly wage. Become the sovereign CEO personal wealth of your wealth, rather than a passive corporate customer. The best investment on earth will never be a stock or a house. It is your personal capability. If you possess high-income skills, no market crash or banking collapse can ever take that away. The financial system wants you compliant, dependent, and constantly working until you are 70. By cutting out the middlemen and their hidden fees, you accelerate your retirement timeline by decades. The invisible scoreboard is finally in your hands, and you know how the game structures is actually played. Stop listening to the corporate lies, trust your own math, and build real sovereign wealth.